Hello everyone, welcome to Thursday. Another update in the market. We have a situation where we're seeing more aggressive investing happening for the last 2 weeks. That's something you watch for when you're looking for a recovery, and so that's a very good sign. We have two major opposing forces that are in the market right now. One is the government and the government spending. And we have a saying, don't fight the Fed. And so the Fed is trying to push on the economy and thus the stock market. And so if you're expecting it to go down, you're effectively fighting the Fed. On the other hand, we have the virus, and we don't know what's going to happen there until there's herd immunity or a cure or a vaccine. The virus is staying. And so how does that play out for the economy? And then earnings reports are coming out, and so far, we don't know what's going to happen. But we have seen in the past in these scenarios, companies tend to add in all of their bad stuff because this is going to be a terrible quarter anyway, so why not go ahead and write off things, which makes the earnings look even worse, at least in the short term. On top of that, often guidance comes out at a lower rate for the next 2 quarters. And so those might be surprises to the market, and so those are things the market's going to have to deal with. My concern right now is that the only real news that we have that's definable is what's happening with the stimulus side, and we don't know the other pieces. We don't know what's going to happen with the virus. We don't know what's going to happen with the earnings reports. And so I do think we should keep a relatively conservative posture and just kind of wait things out. I'm very happy that the market is going up, but we need to wait and see what's going to happen with these other forces. So keep a good outlook, keep safe, keep healthy, and I will look forward to talking to you again tomorrow. Thank you.